Over the past week, we've seen max fear out here in the stock market as stocks continue to crumble lower. However, Friday at the end of the day, we saw the S&P 500 rocketing on the way up. We saw the NASDAQ rocketing on the way up. However, I'm going to share with you guys this stat that shows that stocks do this 68% of the time. I'm going to warn you guys, the selling is not over with yet. Now, as we come over, look at the fear and greed index like we do quite often on this channel. Every day I'm watching this, and over the past few weeks, what have we noticed? We've only been able to get to neutral a couple times. Boom, smack back over into fear, and occasionally we come all the way down to extreme fear. And like a wise man once said, be fearful when others are greedy, be greedy when others are fearful. Now, it's not only the fear and greed index actually showing us there's a lot of fear out here in the market, which normally isn't indicative of good buying opportunities in the stock market. But come over and look at the most recent investor sentiment survey we got this week. Yikes, this is one of the worst readings I've seen in quite some time. Only 19.4% believe the market is going to go higher. We have 60% on the sell side. This is one of the most bearish readings I've seen in quite some time. Like I said, a lot of times we can use these extreme readings as contrarian indicators. However, when you couple that with articles like this from Jeremy Grantham on the meltdown coming for US stocks and where he's putting his money now. Now, Grantham's basically saying, watch out, things could be extremely ugly. And in the past, if you don't know who Jeremy Grantham is, he has called a lot of the major crises out here in the stock market. You might say, well, Mike, he is always a bear. He's a perma bear. Nothing's wrong. Jay Powell said, come on in. The water is warm. Well, let's go ahead and look at one of the best investors of all time, and that is Warren Buffett. Warren Buffett is defending his pile of cash. And if we go back and we look at some of the results that Warren Buffett has had over the years, and you look at Berkshire versus the S&P 500, this is only showing so far this year, but we know Warren Buffett historically outperforms the S&P, and up to this point, it has been no difference as well. Even though we see Berkshire starting to pull back a little bit, look how drastic the S&P has pulled back. We look at the biggest holding that Berkshire has: Apple, American Express, Bank of America, and Coca-Cola and Chevron. However, the fact that they have such a big pile of cash is troublesome. And if you look at what this article is basically summed up as, the legendary investor wrote in Saturday's annual letter that Berkshire will never prefer cash over good businesses. Now, so what does that tell you? Everything is overvalued. It does not make sense buying at these levels, and we could be in for one major top. However, could the shorts about to be squeezed? Now, we have more things coming up as well. Let's not forget, we have the potential government shutdown coming up once again as well. I know it seems like every time we turn around, government shutdown. The last few minutes, they come up with a deal. So again, this could be a problem for the stock market as well, if indeed the government does shut down. However, one of the other warnings we got out here, and we were talking about that this week on the live stream. And if you guys want to make sure you don't miss the next time I go live, make sure you subscribe and the bell notifications turned on for all. And this week and each week this month, we are going to be giving away a minimum of one Take Profit Trader account. So you want to make sure you're signed up to the email and the link in the description box down below. It's the first link in the description box down below. But right here, closely watched Atlanta Fed GDP tracker sees U.S. economy contracting in the first quarter. And if we actually look, all right, we talked about this on the live stream. We've seen this headline come out, and now the Atlanta Fed is basically projecting the first quarter GDP is going to be a negative 1.5%. Not just slowing down, but negative 1.5%. Now, could it just be a little blip and everything comes roaring right back up? You guys let me know what you think in the comment section down below. Now, we can see there's only 17 days left until the next FOMC meeting, and the market is already starting to sniff out the weakness in the economy. If you guys remember just a week or two back, the market wasn't priced in the first rate cut all the way down to about September or October. Now, look, as soon as June, the market is now starting to price in the Fed is going to be starting to aggressively cut rates again. You see them cutting it. The market sees the Fed cutting rates in June, in September, then again January 1st in 2026. And then if everything is fine with the economy and that just maybe the Atlanta Fed is wrong, then why is the market pricing in these cuts out here from the Fed? Now, if you guys want to check out the 4 prop firms that I use and make sure you get the best deal with those prop firms like Apex, My Funded Futures, Take Profit Trader, and Tradeify, make sure to use the links in the description box down below. Now, if we come over and look at this stat real quick, I want to show you guys that March 1st actually is a very bullish day out here for the market. One of the reasons we have new 401k money coming into the market, and a lot of times beginning of the month ends up being very bullish. But if we look at this stat real quick, brought to us from Almanac Trader, we can see going back to 2000 all the way to 2023, notice the first day in March, we have been up for the S&P 500. We have been up 17 times, only down 8. That's a 68% win-loss ratio. We come over and look at the Dow Jones, 64% of the time we're up. We come over and look at the NASDAQ, 64% of the time we are also up. So we're going to find out if this stat will come true out here on Monday. Now, let's not also forget, we are in the midst of earnings season. Yes, we've had a lot of the big boys out, but on Tuesday, we get Best Buy, we get Target. When we look at the expected movers out here, look on Monday, GTLB expected to move plus or minus 15%. On Tuesday, we have Target. We have Target and CrowdStrike expected to move plus or minus 9.5%. Best Buy plus or minus 8%. AutoZone plus or minus 5%. Then on Wednesday, MDB expected to move plus or minus 15%. Marvel expected to move plus or minus 13%. So we still have a potential for quite a few bigger movers out there. Now, as we come over and look at a chart of the SPY versus HYG in the bottom pan of the chart, that is essentially high yield bonds. And notice high yield bonds over this past week have been screaming up while the S&P 500 was on the move lower. Then we come over and look at the Dow Jones in the top hand in the top part of the screen, transportation index on the bottom. Now, the Dow Jones versus the transportation index is showing us divergence. Look at the high over here in the transportation index. I'll go ahead and grab my drawing tool real quick and just draw a line across the peaks. Notice they were slanting downward at a time when the Dow essentially had equal highs. All right. Is this a warning sign that more selling is to come? Then we come over and look at the yield curve. We are still uninverted. However, one good note out here for the bulls is the fact that the yield curve is not steepening at this moment. At this moment is the key with that statement. Now, if we come over and look at the volatility index, recently we've been seeing a little bit of a spike up in the VIX, but then we look at the VIX out here on Friday, and what do we see? We saw the VIX just simply cratering lower. The VIX was down 7.1%. We look at the dollar index on the move up once again, and normally a stronger dollar is usually a little bit of a headwind out here for the stock market, but as the dollar is on the move up, guess who is on the move down? If you said the precious metal gold, you would be absolutely correct. We've also been talking about this on the live stream that at minimum, I see gold coming down towards the 38% retracement. And I'm not just saying that because we're right here right now. I've been saying that all week long on the live stream. And I would not be the slightest bit surprised to see gold come all the way down towards a 50% retracement and essentially fill the gap from the contract rollover and maybe come down here towards this high volume node at about 2,746. Now, as we come over, we start looking at the SPY on the weekly chart. Notice what we have, right? We had a bearish looking day at the end of Thursday, but then on Friday, we came down lower. Boom, we popped back up, closing in the middle range of the weekly candle. So is this actually bearish on the market? Because if we look, here's a low, higher low, higher low, higher low, higher low, and still to be determined, will this also end up producing a higher low? If so, that is not bearish for the market. However, the MACD indicator on the weekly chart is bearish at this moment. And then we start looking at the daily chart. Notice the MACD indicator is below the zero line, and we're just now starting to see the early signs of the MACD indicator starting to flatten out. However, is it over with yet? One thing I want to caution you guys on, if indeed this data is going to continue to come in very weak, we want to go ahead and pull some fibs and say, okay, is it possible that maybe, just maybe, at the end of Friday was just the start of a little bit of a short squeeze rally? We come up and then we start to turn at one of these Fibonacci retracement levels, and then we set up a much larger ABC pattern on the way down. Now, quite often we'll see the market come up towards the 38% retracement, either go sideways, pull back a little bit before ultimately trying to make its way towards the 50 or 61.8 fib level. As we look at some of the intraday charts, notice on the 4-hour chart, you're starting to get that little bit of a curl on the MACD indicator. And then out here on the 30-minute chart, notice we already had the bullish cross of the MACD indicator. And this is something we've been talking about on the live stream as well. Even before we came down and started taking out the low from a few days back, I said, watch out. If we do, could we be setting up some type of MACD divergence, aka looking for a bounce in the market? And that's exactly what has transpired. But if you look at the SPY, one of the problems that we have out here now is the fact that we closed outside of value area high, which comes in at 589. Anytime we close outside of value, that basically sets up that either the next day, with that either the next 1 to 2 days, highly probable we're going to come back and revisit that level. And also, if you look, we had a swing point here, we broke out from it, and we really have not come back to retest that level just yet. So that could be a structure breakdown point retest. And that's also another topic we talk about quite often on the live stream. Now, when we come over and start looking at the futures markets real quick on the 4-hour chart, notice that was a very bullish candle at the end of the day. We actually came all the way back up above value area low off the weekly chart. Now, value area low from the weekly chart is going to come in at 59.35 and a quarter. The point of control is going to be 59.65.75 with value area high being 6,042.75. Now, the fact that we're within value, what are we really looking for? I'm going to be looking for Sunday and even Monday. Do we break back below value area low? If the answer is yes, I want to retarget this wick right down here. Now, that wick target would only be about 59.13.75. And then I want to see, do we start setting up some type of ABC pattern on the way up? And how I'd really want to play this out would be grab a fib from the recent high out here from the 19th, the week of the 19th, and then look, okay, what if the market just basically pulls back from here, pulls down towards this area? Look at where the 100% level completion would be. That would bring us right near the 61.8. Now, could we go a little bit lower? We could, but again, we got to wait and see when we get down there. Now, one of the ways I'd like to zone off this level, and again, we do this all the time on the live stream, candle wick right down here to the candle body. I do think that in the near future, a very high probability target, we do come back down towards that area, especially the fact that we still have a lot of headwinds out here, like a potential government shutdown. Then we come over here and we start looking at the 30-minute profiles. Notice we have this huge minus development area within the profile. So again, it would make sense that the market comes back and re-auctions this area. Now, think about minus development areas as nothing more than inefficiencies in the market. Whenever there's an inefficiency, the market loves to come back and repair that area. Now, if you look at value area high comes in at 5909.75. And notice we close way above value area high, which indicates highly probable that either Monday or Tuesday, we're going to come back and revisit that level. Then we have the point of control down here at 5879.75 with value area low being 5865.75. However, we also still have an untested point of control up here at 6,015.75. And this point of control right below us that we talked about from Friday is also going to be an untested point of control. So we have two untested point of controls above us and one right down here below us. And that was quite a move out here late in the afternoon on Friday. We essentially had a 123-point move up on the S&P 500 on Friday. Now, if we come over and look at the economic calendar, what do we got going on this week? Sunday night, not a whole lot. On Monday, we essentially at 9:45 have final manufacturing PMI. Then at 10 a.m., we have ISM manufacturing PMI and ISM manufacturing prices. We'll go ahead and scroll down to Tuesday. What do we got? We have no major economic news. Yes, we have some FOMC. Yes, there could be some FOMC members speaking, but that's about it. Then we look at Wednesday. We get the ADP non-farm employment change. We get the ISM services PMI at 10 a.m. Then we get crude oil inventory numbers and we get the beige book. Thursday, we get the weekly unemployment claims at 8:30. Then also, I don't want you guys to take your eyes off this, right? This could be a market moving event. The euro has their interest rate decision at 8:15. However, just like when we have our FOMC meeting, we get the large moves typically after Jay Powell speaks. So we want to be mindful. After 8:45 is typically when the euro is gonna have the much larger moves out there. And the reason why I bring that up of the dollar index. So if the euro has an adverse reaction, so if the euro has a large move up or down, that's likely going to influence the dollar. And if the dollar has a big move, well, you know what? The S&P 500 stock market will likely also have quite a large move. We also have some FOMC members speaking, and then Friday is going to be the big boy out there. We have the average hourly earnings, the non-farm employment change, along with the unemployment rate. Now, let me know in the comment section down below. Do you guys think that the jobs numbers coming out Friday are going to be good, Or do you guys think we are going to miss on those numbers? Let me know your thoughts in the comment section down below. Now, as we come over and look at the NASDAQ QQQs, notice we did not close in the middle of the range on the weekly chart like we did with the S&P 500. Yes, we still have a little bit of a wick where we spike a little bit below that low. However, we did not close below it. So right now, the best case scenario for the bulls is the fact that this is going to be an upper level consolidation. However, if we start closing below the low, and that's going to be a price point of about a 499.70, watch out, we're likely going to go lower. And look at the MACD indicator real quick. Notice how much the peaks continue to get lower and lower to the upside. Again, a sign that the momentum to the upside is starting to wane off just a bit. Now, as we come over, we start to look at the daily chart real quick. And for this, I want to go ahead and turn on the moving averages. Now, when we put those up, the bottom moving average right here is essentially the 200 period moving average. We have not hit that level yet. And even if we go back over and look at the SPY is much further away from the 200 than it is from the NASDAQ. Now, it's highly probable at some point this year that minimum we are going to come back and test the 200 period moving average. And at that point, it's going to be critical. Does the 200 period moving average hold, or does it essentially break? And then maybe we end up getting the death cross. Now, if you notice right here on Friday, what do we see? We went below the low on Thursday. We came right back up about the middle of the range of that large candle. And notice we had this structure breakdown point looking for the market to come back and test, which it has not at this moment. 509.55 is a little bit of a target to the upside. And I also want to go ahead and pull a Fibonacci retracement from the swing high all the way down here towards that swing low. 38% retracement makes sense. A logical retracement on the way up. 513.76. A lot of times when we hit the 38% retracement, the market will do something other than continue in that direction, either pull back or go sideways. Now, does that mean that happens 100% of the time? No. And I do believe we are likely going to get a bounce, maybe up towards even this high volume node. And with Monday having that very bullish stat out there, that could also lend to the case that we have a little bit more squeeze to go to the upside. We come over and start looking at the 4-hour chart. MACD looks horrible, but look, we are well below the zero line, and we're starting to barely get that flatten out effect on the MACD indicator. On the 30-minute chart, we do have a bullish cross, and that last push on Friday was very, very substantial. We zoom this out a little bit and notice, pay attention to the valleys in the MACD indicator. If you look at this low right here, look how low the MACD indicator was at that point. Then as we came down lower on Friday, notice the lows on the MACD indicator was much higher. Again, another warning sign that the momentum to the downside was starting to wane, and we were highly probable going to start to get a bounce at some point in the market. Now, notice also we did close above value area high, which comes in about 504.41, which indicates that either Monday or Tuesday, the Qs are likely going to come back and test that level. And do we essentially run up a little bit and then set up some type of ABC pattern on the way up? Maybe we just come down here, little intraday, little wick down there, and then we go ahead and rally back up. Now, as we come over, look at the futures markets real quick. Notice we did hit that point of control off the composite profile. That was one of the areas we were talking about this week. I'm really surprised it went quite as far as we did. But that last candle that we saw on Friday, quite bullish out here. And as I'm looking at this, right, if we had this consolidation right up in this area, which I'm going to go ahead and draw this out, that would have been something in the ballpark like that. If you want to be more conservative with that area, where I would expect the NASDAQ to come back up towards. Now, as we look at this 4-hour chart, there's a couple areas I want to pull a fib. I want to pull it all the way up here from the high from about 2 weeks ago down towards the low. That 38% retracement at that area comes right in the middle at this consolidation area that we broke down from. And then we had the 50% right up here about 21,389. However, if we just simply grab this last leg down, notice we've already come up towards the 50% retracement. So anywhere between the 50 and 61.8, do we start to pull back? And when we pull back, can we come back towards this high volume node, which also correlates very closely with that wick? Now that high volume node on the composite profile is going to be somewhere around 20,754. Now look at the weekly profiles. We have value area low coming in at 20,925.5. We have the point of control 21,055 with value area high being 21,654.5. Now, technically we are below the weekly value area low, but not by a whole lot. And last week we also closed below value area low, and that rule said that either this week or next week we were likely going to test it. Well, you know what? This week, we were nowhere even in the ballpark. Look at the range we had to the downside. We had a 1,352 point range. That was massive. We doubled the range from the prior week. Then we come over and start looking at the daily profiles and notice we are closing above value area high, which is going to come in at a price point of about 20,719. The point of control is going to be about 20,629 with value area low being 20,547. Now, I want you guys to pay close attention. We had this little structure point right here, this little swing point. The market broke out from that area. We still have not come back to test that level. These are some of the type of targets we talk about all the time on the live stream. And I do think it's highly probable sometime in the near future, we do come back towards that area. I do like the fact that on Thursday, we closed below value area low. And on Friday, we were able to come back and test that level, but we do have an untested point of control above us. That's going to set up a scenario where we have two untested point of controls, one above us and one below us from Friday. So let me know in the comment section down below, which of these point of controls do you guys think gets hit first? Is it the first one up here at 21,091 3/4, or is it going to be the one down here at 20,629.00? Now, if you guys like to learn the difference between a pro and pro plus account with Take Profit Trader, make sure to watch this video right here.